Think it's bad in commercial real estate? Take a look at hotels. With business travel down, the value of U.S. hotel properties in default or foreclosure surged to $26 billion as of August 19th, from $9 billion at the end of the first quarter. And that is just hotels. Marisa Manley tracks commercial real estate as president of Commercial Tenant Real Estate Representation, an advisory and brokerage firm which represents corporate tenants nationwide. You get figures like that, and it suggests that this is not a bad time to be a tenant.
This is an excellent time to be a tenant, Mike. We see a lot of opportunity out there for tenants. There are some commentators who are suggesting that we may be at the bottom of the market. But from a tenant perspective, I think that's not the case. When we look at the job figures and we see that there's a prospect for continued unemployment and perhaps increased unemployment, that's a fundamental that drives the office market. So we can continue to see a good opportunity there for lower costs, for much more flexibility for business operations, and for tenants to increase the quality of the space they're leasing, Mike. However, there's also some risk in this market. You just commented on hotel defaults. We're seeing landlords defaulting in commercial office buildings. And what that means is that tenants have to protect themselves against landlords who cannot perform and lenders who may not be willing to honor bargain leases.
All right, let's take a couple of those things one by one.
Sure.
Obviously, a tenant can go to the landlord and say, look, I know you're in trouble. Commercial real estate is terrible. Square foot prices are going down across the city, so I want to renegotiate my rent. But you also mentioned flexibility for businesses. What does that mean?
Well, you know, a long-term lease, 10 years, 5 years even, very static. A business operations changes very rapidly. So the right to expand in a cost-effective way, the right to chop your space in half, the right to cancel your lease. Particularly cancellation rights are something that landlords dislike very much because they make a building very hard to finance. And we are seeing that landlords are much more receptive to cancellation rights, Mike, than they've been at any time in the past. We're also seeing increased flexibility on tenants' abilities to use space, whether it's more classrooms, whether it is just something that may be a little unusual in the way a building has been used, that gives tenants greater flexibility in their business operations.
The offset for the tenant, though, is he's got to pay the expense of moving if the landlord won't give him what he wants. Is that a stick for the landlord in this case, that in this business climate?
Yes and no, Mike, and I think this is something that most people don't really understand. Yes, it can be costly for a tenant to move, but it's also very, very costly for a landlord when a tenant moves out. That means vacancy, that means marketing costs, and if the landlord has to bring in a new tenant, which they will, it probably means demolition costs and construction costs. So I think what the tenant is very, very inclined to see their own inconvenience and cost in a move. They also have to be aware of the landlord's cost. So I would say it's a pretty even balance there in terms of the cost to both sides.
All right, you mentioned risks in this situation. Yeah. We've been talking about benefits. What are the risks to tenants?
Okay, the risks in today's market are a little bit unusual. So it's the risk that a landlord is not going to be able to perform his obligations because he doesn't have the money. And it's also the risk that if your landlord goes away, a lender will not honor a bargain rate lease. I'll give you an example. A tenant called us about a week ago. They had moved earlier this year from Madison Avenue to Broadway, to Times Square, thinking they were entering into a really terrific sublease. Their sublandlord is in default. And the landlord has approached them and said, hey, start paying me. And that tenant still doesn't know if they're going to be in that same space in a few weeks or if they're going to be on the street. Let's look at McGuire Properties. Largest landlord in L.A., Class A properties. They're about to give back 7 buildings, $1 billion worth of mortgages. When they default, if they do, those tenants are going to have to wonder if the lenders are going to honor their leases. So the best time for a tenant to protect itself is when they're choosing a landlord and before a lease is signed.
But of course, if I am a homeowner who's going to be thrown out of my house, it's a different thing from a lender emptying a building. They get nothing except the huge carrying costs.
Yeah, but you know what? Let's look at some of these buildings. If you're in a building that's got a high vacancy rate to begin with, landlord may want to mothball it. The lender may want to mothball it. Or the lender may come to you and start asking for changes. Maybe they're going to cut back on service. Maybe they're going to increase the rate. So there are many, many things a lender can do short of asking you to leave the building that could be very disadvantageous if you're not protected. And again, I think the time to protect yourself is before you make the deal, when you're shopping around for who your landlord is going to be.
And when you mean protect yourself, write it into contracts?
Yeah, write it into contracts, but always keeping in mind, a contract's a piece of paper. What's it really worth? And I think one of the biggest protections for a tenant in today's market certainly can be self-help rights. If you're a large tenant in a suburban office building, you may want the ability to pay taxes or to pay the landlord's utility bills. And certainly every tenant in today's market should be looking for what we call a non-disturbance agreement. So if your landlord goes away, the lender is then obligated
to keep you there.
To keep you there.
All right. Marisa Manley, thank you very much. Good advice for people who are leasing these days. It's a tough market in the commercial real estate.